Hello, welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Tjornehoj. For the week ended January 21st, 2015, investors had a lot to consider this week. Big news out of Switzerland, where the Swiss Central Bank dropped a three-year-old peg to the euro, causing that currency to spike considerably very quickly, and in anticipation of a quantitative easing program from the European Central Bank, the Bank of Canada dropped its overnight rate by 1/4 percentage point, which is another big move out there. So a lot of central bank movements this week. Let's see how investors reacted to it all. Starting off at the top, in our macro groups, we see equity fund investors withdrew about $1 billion this week. Taxable bond funds saw inflows of $1.7 billion, municipal debt funds about $700 million to the good, and money market funds with outflows of $7.9 billion. Well, like I said, there was quite a bit to consider this week as central banks seem to be changing their minds and moving about in unpredictable ways, and this caused a little bit of risk-off trading in the markets. This week, the S&P 500 was up about 2%, so let's see what that looked like for equity mutual funds. Like I pointed out at the top of the program, $1 billion was pulled from them. Investors tended to make some risk-averse moves this week. Domestic equity mutual funds had outflows about $225 million, which is not too much for them. Non-domestic, on the other hand, ended up with outflows of about $769 million, which is going in a different direction than they often do when domestics have outflows. The leader this week was multi-cap funds. They had about $240 million in net inflows. Managed futures mutual funds also had pretty good inflows, about $208 million. But other than that, not too many multi-hundred million dollar inflows this week. Outflows were the norm, or just standing pat, as fairly light activity was noted all around. Well, the next group to look at is equity ETFs. They also had outflows this week, even more so than mutual funds. About $4.9 billion was bled out of them. Emerging markets and financials tended to see the bulk of outflows this week, while gold, small caps, and natural resources products tended to see inflows. At the top of the charts, as you can see, Spider's gold product GLD led all comers with inflows of about $1.4 billion, a substantial week for them. They don't see too many billion-dollar weeks. SPY led outflows with $5.9 billion pulled out of it. The next group to take a look at is taxable bond funds. Here again, they had about $1.7 billion in inflows, a smaller inflow than we've seen in recent weeks to start the year, but pretty much par for the course. Core plus bond funds led with about $1.8 billion in inflows. Core bond funds not too far behind, about $686 million in inflows for them. At the other end of the spectrum, emerging market hard currency debt had outflows of about $173 million, and loan funds were definitely the worst off. They had outflows about $682 million this week. They just cannot seem to find a bottom to those outflow figures, and until yields start to get up enough to lure investors back in, I don't see an end to that for them. Otherwise, the way to theme, the overarching theme for taxable bond funds was similar to equities, with generally risk-off trades being made. Well, let's turn our attention to taxable fixed income ETFs. These products had inflows this week, about $348 million, so similar results as their mutual fund cousins. The sentiment here was less clear, though, where you could see treasuries, short-term corporates, and high yields all posting some outflows in some cases, and inflow sides. It could have been anything you were looking at. In this case, we saw the 3 to 7 year Treasury IEI lead with about $335 million in inflows, while the iShares mortgage-backed MBB had outflows this week. So it was hard to tell what direction investors were going. It's probably very product-specific. Well, one more group to look at is municipal debt funds. They too had inflows this week, $700 million, was pretty good for them. They had a fairly flat market this week. The performance, as you see off to the right, was about 0% this week, so nothing to get excited from there. High yield munis led the way with $239 million in net new money. Not too many groups had outflows, and what's interesting to me, the 4-week moving average is up about $150 million over the past 8 weeks or so. So I think investors are really building momentum into the muni market. Well, the final group to take a look at is money market funds. They had outflows this week of $7.9 billion. Both sides, both retail and institutional, pulled money out. Retail about $1.2 billion, institutions about $6.7 billion. Now, the outflows could have been attributed to a number of things. Maybe it's bonuses. Maybe companies are just having to make some more CapEx spending at the start of the year. What we do notice is that the last 6 Januaries have all posted outflows, and this is no exception so far. So keep your eye on outflows next week from money market funds, because they're likely to see a few more before we turn the corner there. Well, that'll do it for this week's flows review. Join us next week where we'll discuss what's going on with mutual funds and ETFs, or join us online at www.lipperusfundflows.com. Thanks for watching.